would you do if you suddenly had $100,000 land in your lap? I'm going to look at how you could build a hybrid growth and income portfolio with that windfall, combining the steady cash flow of income investing with the long-term upside of dividend growth. Hold on to your seatbelts, folks. This is going to be a good one. This is the first video in my brand new Windfall series where we'll break down 3 different styles of investing $100,000: income, dividend growth, and a hybrid growth and income strategy. Today, we're starting with the hybrid growth and income strategy, a mix of 2 worlds that can protect your capital, grow it over time, and generate a nice amount of income at the same time. The growth and income strategy, well, it's all about balance. Instead of going all in on high yield investments that may not grow, or going all in on growth that doesn't pay you anything today, you combine both approaches. You're getting the best of both worlds. Growth investments will give you long-term wealth building and rising dividends over time. Then, well, the income investments, those are going to add those predictable distributions that you can use right away to either reinvest into your portfolio or perhaps to supplement your overall income stream. Together, this style means you can enjoy your portfolio today and watch it snowball into the future. In a recent video, we looked at a possible hybrid scenario where we split ETFs into 3 broad categories: growth, growth and income, and pure income. What we didn't do at that time was assign any weightings to these categories. And that's exactly what we'll be tackling next. A sub to the channel is the best way to tackle some future content. For today's $100,000 windfall example, the allocation I'll be working with is 40% dividend growth, 20% pure hybrid growth and income, and 40% income. This mix gives us exposure to companies that are steadily growing their dividends, funds that balance income and growth in one package, and of course, those higher yielding income plays that keep the cash flow coming in every single month. There is a couple of qualifications that I do want to add before we get into this portfolio. This example is assuming that the 100,000 is what you have allocated to invest. The windfall may have been a way bit bigger for sure. Hopefully you spent the excess wisely, but who am I to judge? Also, the prices used in this example are from market close on Friday, September 5th, 2025. So, without any further ado, let's do this. We're starting with our dividend growth foundation, and that makes up 40% or $40,000 of the portfolio. The goal here is twofold. First, to provide solid exposure to the major indexes, and second, to seed in some global diversification so we're not overly concentrated in just Canada or the United States. This bucket gives us the stability of blue chip dividend growers while also capturing the compounding power of those broader markets. I have selected 4 ETFs, and they are, this should not come as a surprise, we have the Vanguard S&P 500 Index ETF, ticker of VFB. So this is giving us exposure to U.S. large cap growth and dividends. Looking at their dividend yield, it's actually pretty low. I think this is the lowest on the list today, 0.96%. However, when it comes to total returns, their 1-year total return, 21.66%. That's not too shabby. For this portfolio, we're going to add 94 shares for roughly a 15% overall share of the total portfolio. So that's going to cost us $14,993.94. So we've still got $85,006.06 to spend. So let's move on. And this is another favorite, and I think this one is not going to surprise you either. We have the iShares Core Equity ETF portfolio. Yep, XEQT. So this is all about global diversification, and they do a really good job of it. You've got exposure to markets in pretty much every continent, as well as those emerging markets. I love that. You can't beat that. Their dividend yield, that's coming in at 1.92%. So their 1-year total return coming in at 23.50%. So for XEQT, we're going to add 264 shares for roughly a 10% share of the total portfolio. So that's going to cost us $9,987.12, leaving us, we still got $75,018.94 to spend. Let's pick our next one. I'm going to choose the iShares Canadian Dividend Aristocrats ETF, ticker of CDZ. This, of course, tracks those Canadian aristocrats. These are very blue chip stocks, and they also have a history of course, increasing their dividends. I do love this fund. It has a dividend yield of 3.51%. Its 1 year total return coming in at 20.42%. For this one, I will add 254 shares for roughly a 10% stake of that total portfolio. So that's going to cost us $10,002.52. We still have $65,016.42 to spend. Up next, we have the iShares MSCI EAFE Index ETF. I know with XEQT, we got exposure to a lot of those international developed markets, but I want a little more. I want a little more, and that's where XEF is coming in. They are basically, well, they invest in international developed markets outside of North America. They do have a dividend yield of 2.52%. 1 year total return, 20.45%. So for this one, we're going to add 112 shares for roughly a 5% stake of the total portfolio. So we are spending $4,972.80 on this one, leaving us $60,043.62 left to spend. Before we move to the next category, I do want to give an honorable mention to VDY, as honestly, it was a toss-up between them and CDZ. You could have swapped. You could easily swap the two of them for sure. Let's move to that hybrid growth and income category. So this one's going to be 20% of the overall portfolio, or $20,000. This is where things get interesting because instead of separating growth and income, these ETFs, well, they blend the two approaches inside a single package. I've narrowed it down to two ETFs that I think are very familiar for sure, especially if you watched that last hybrid video. The first is the Hamilton Enhanced Multi-Sector Covered-Call ETF, ticker of HDIV. HDIV holds multiple covered call ETFs across multiple Canadian sectors, and they do apply some modest leverage to boost those returns. So they have a dividend yield of 10.72%. It's nice to see the numbers a little higher. Their 1 year total return, 27.35%. So that's not too shabby. I think I will add 520 shares for roughly a 10% stake in the total portfolio. So that will cost us $9,994.40, leaving us $50,049.22 left to spend. All right, up next, HYLD, so the Hamilton Enhanced US Covered Call ETF. They actually take a very similar approach to HDIV, except the big difference is that they're focused on the US market. So this is giving us a bit more US exposure. They have a dividend yield of 12.38%. Their 1 year total return, 19.65%. For this one, we will add another 715 shares for a roughly 10% stake of the total portfolio. So that's going to cost us $10,010. That will lead us $40,039.22 left to spend. Finally, we come to the Pure Income basket, which makes up 40% or, well, $40,000 of that portfolio. This is where we really lean on high yield ETFs to generate consistent monthly distributions. I do have 4 awesome ETFs for you. We will start with, you guessed it, HHIS, our Harvest US High Dividend Covered Share ETF. Now, this one does invest in a whole slew of those Harvest High Income shares for the single stocks, brings them all together, adds some leverage. Oh boy, this is a good one. This is a good one for sure. They have been absolutely pumping out the dividends. In fact, they have a dividend yield of 23.73%. Looking at their 1 year total return, and it's really a 7-month total return, 19.92%. So it is skewed down because, well, they haven't had the full 12 months. They haven't received that whole yield yet. So look for this number to be much better once we've got a full year under our belt. So for this one, we will add 1,187 shares for roughly a 15% stake of the total portfolio. So we're spending $15,003.68. And that leaves us with $25,035.54. Sticking with Harvest, we've got HHIC, so the Harvest Canadian High Dividend Covered Call ETF. So this one, it's providing exposure to Canada's high dividend payers with a covered call overlay, boosting yield and delivering reliable monthly income. I will add that this one is brand new and we do not have a lot of data yet, but it is one to watch and profit from at the same time. So their dividend yield is coming in at 15.19%. 1 month, 1 month total return is 6.58%. So once again, give this one a year, and I think we're going to have some really nice numbers on this one. So I did add 792 shares for roughly a 10% stake of the total portfolio. So this is costing us $10,002.96, leaving us with $15,032.58. Here we go. Our next one, and oh boy, this is a good one. The Evolve Canadian Banks and Lifeco ETF. We're talking Bank, BANK. This ETF gives you exposure to Canada's most resilient sector. And with covered calls and leverage, the income is not too shabby either. So their dividend yield sitting at 15.29%. Their 1-year total return, 29.38%. I'm liking that. I really am. So we're going to add 1,176 shares for roughly a 10% stake of that total portfolio. So we're spending $10,007.76, leaving us with, we got a little bit left, $5,024.82. All right, our last pick is the Harvest Bitcoin Leaders ETF, HBTE. Now, this one is a bit different, as it does provide exposure to Bitcoin and the companies in the Bitcoin ecosystem. It is also the ETF with the highest total return this year in this portfolio. Oh boy, they've got a dividend yield of 22.80%, but that 1-year total return, 51.83%. Holy banana bread, that's pretty good. So we are adding 289 shares for roughly a 5% share of the total portfolio. So that's going to cost us $5,019.93. Leaving us, we get some leftover money, $4.89. Go enjoy a coffee. So that is our hybrid growth income portfolio. And now the big question is, just how much growth and income will it generate? Let's start with the dividends. Provided we do not see any changes, this portfolio will generate about $10,500 per year. Of course, if you are reinvesting those dividends, this number goes up for sure. Growth itself is a very hard number to calculate. And any number I give you comes with a whole bunch of grains of salt, as the market can and often will do the unexpected. However, if the next year is as good as the last one, then we're in for some solid growth. In fact, it would amount to a 26.53% growth in the portfolio. Think of this as your best case scenario, but that $100,000 portfolio would be valued at $126,529.42. With that being said, I would still temper your expectations big time, since I have a hard time believing the market can keep this up for another year. Then again, I said the same thing a year ago, so keep that in mind too. So that is our hybrid growth and income portfolio. Next week, we will do it all over again with either the dividend growth or the income portfolio. I can't wait. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on our TFSA challenge. Thank you for watching, and I will see you in the next video.